government revenue collections, accountable forms, and fiscal accountability. For municipal treasurers, revenue collectors, cashiers, barangay treasurers, and market collectors. Follow the slides on your screen as this plays. Next slide. Here is the outline. Part 1, Legal Framework. Part 2, Sources of Receipts. Part 3, Accountable Forms. Part 4, the RCD, RAAF, and CRAAF. Part 5, the Collection Cycle. Part 6, Critical Issues. Part 7, Electronic Collections. Part 8, the Treasurer's Responsibility. Part 9, 30 Common Audit Findings. Part 10, 25 Misconceptions. Part 11, Internal Control. Part 12, Fidelity Bonding. Part 13, Legal References. Part 14, the Excel Audit Workbook. Next slide. Parts 1 to 6, in detail. Part 1, the Constitution, Presidential Decree 1445, and the NGAS Circular for Local Government Units. Part 2, Tax Revenues, Service Income, Shares, and Grants. Part 3, Accountable Forms, the National Printing Office, the Master List, and Custody Rules. Part 4, the Report of Collections and Deposits, the Report on Accountability, and the Consolidated Report. Part 5, the 8-step collection cycle and the cash book. Part 6, Job Order Collectors, Lapping, Veil, Check Fraud, and Falsification. Next slide. Parts 7 to 14. Part 7, Electronic Collections, Collect Aggregate and Remit, and Self-Collect Credit. Part 8, the Treasurer's Supervisory Responsibility. Part 9, 30 Common Audit Findings. Part 10, 25 Misconceptions. Part 11, Internal Control and the Vault Checklist. Part 12, Fidelity Bonding, Underbonding, and Limited Personnel. Part 13, Legal References. Part 14, the Downloadable Excel Audit Workbook. Next slide. The table of contents is on your screen. Part 6, 9, 10, and 12 carry the heaviest audit exposure. Next slide. Part 1, the Legal Framework. Every rule in this guide traces back to a small number of legal sources. At the top sits the 1987 Constitution, Article 9, Part D, which establishes the Commission on Audit as an independent constitutional body with power to examine, audit, and settle all accounts on government revenue and receipts. Below the Constitution sits Presidential Decree 1445, the Government Auditing Code, the single most important statute on government collections, accountability, and personal liability. Below that sits Republic Act 7160, the Local Government Code, governing the Treasurer's duties, sources of local revenue, and deputization of barangay treasurers. Then the Commission on Audit's Accounting Circular numbered 2002-002, the NGAS for Local Government Units, which prescribes the report of collections and deposits, the report on accountability for accountable forms, and the cash book rules. And finally, Treasury Circular number 1-2026, governing fidelity bonding. These citations recur throughout this guide. Next slide. Special attention on one of the foundational rules of the entire system, found in Section 63 of Presidential Decree 1445. The law states, quote, except as may otherwise be specifically provided by law or competent authority, all monies and property officially received by a public officer in any capacity or upon any occasion must be accounted for as government funds and government property, end quote. The moment any government employee touches government money, in any capacity, that money becomes government funds, and that employee becomes personally accountable for it. There is no informal collection. There is no off-the-record collection. There is no grey area, no exception for casual arrangements, no exception for emergencies, and no exception simply because the amount seems small. Someone is personally accountable for every single peso of it, from the moment it is received until the moment it is properly deposited and recorded. Next slide. Two of the most important sections in this entire guide. Section 68, subsection 1, of Presidential Decree 1445 says, quote, "No payment of any nature shall be received by a collecting officer without immediately issuing an official receipt in acknowledgement thereof." End quote. Section 69 says, quote, "Public officers authorized to receive and collect monies arising from taxes, revenues, or receipts of any kind shall remit or deposit intact the full amounts so received and collected by them to the treasury of the agency concerned." End quote. Remember three words: immediately, intact, full amounts. Immediately means at the precise moment of payment, never at the end of the day. Intact means the complete amount, with no deduction and no offsetting. Full amounts means precisely what was collected, down to the last centavo. There are no exceptions to these three words anywhere in the law, no partial deposits, and no deductions before deposit for any reason, including using collected cash to immediately pay for office supplies. That is not a shortcut, that is a violation. Next slide. Special attention turns to liability, because this is where many otherwise careful officers find themselves in serious legal trouble. Section 101 of Presidential Decree 1445 says every officer entrusted with the possession or custody of government funds is accountable for them, full stop. Section 102 adds that persons entrusted with custody of funds are immediately responsible to the agency head, without prejudice to the liability of either party to the government, meaning both the subordinate and the supervisor can be held liable at the same time. Section 106 contains a rule that surprises many officers. No accountable officer is relieved from liability simply because they acted under a superior's direction, unless that officer notified the superior, in writing, of the illegality before carrying out the act. A verbal protest is not enough. Without a written protest made before the act, you remain secondarily liable, even if your mayor or treasurer gave the direct order. Protect yourself with paper, every single time. Next slide. Special attention on the Local Treasury Operations Manual, 2019, 2nd edition. The manual requires revenue collectors to turn over their collections, together with the report of collections and the official receipt copies, to the municipal treasurer or the designated liquidating officer, at the end of each and every day, not the week, not the month. The municipal treasurer carries a corresponding duty, personally verifying that the cash turned over corresponds exactly to the amounts on the report of collections. If they do not match, it must be investigated immediately, before the collector leaves. The manual also clarifies that an official receipt itself is an accountable form held in trust by the collecting officer. You are personally liable for its safekeeping, its proper use, and its condition, regardless of intent. Next slide. The 8 fundamental principles, found in Section 4 of Presidential Decree 1445. Principle 1, Appropriation. No money shall be paid out except in pursuance of an appropriation law or other statutory authority. Principle 2, Public Purpose. Funds must be used solely for public purposes. Principle 3, Trust funds. Spent only for the specific purpose for which the trust was created. Principle 4, Shared responsibility. Fiscal responsibility is shared by all who exercise authority over financial affairs, not one individual alone. Principle 5, Proper approval. Every disbursement must bear proper approval. Principle 6, Documentation. Every claim must be supported with complete documentation, or it is treated as non-existent. Principle 7, Faithful adherence to all applicable laws. Principle 8, Generally accepted accounting principles, only to the extent they do not contravene existing law. Auditors cite these 8 principles constantly. Next slide. Special attention on deposit timing, one of the most frequently violated rules. The general rule, deposit intact, daily, or not later than the next banking day. But there is one special rule, from the NGAS Manual for Local Government Units, Section 29. For field collectors where travel time to the Treasurer's office exceeds 1 day, turnover shall be made at least once a week, or as soon as collections reach 5,000 pesos, whichever comes first. This is the only recognized exception in this entire body of law, and it requires two conditions together: genuine documented geographic distance and written authorization from the treasurer. Mere inconvenience, a busy schedule, or forgetfulness are never sufficient. Without both conditions documented, the ordinary daily deposit rule applies in full. Next slide. Part 2. Sources of government receipts. These include real property tax, the Special Education Fund, business tax, community tax, market fees, slaughterhouse fees, building permit fees, and the national tax allotment, among others. Every single source requires separate accounting. Trust fund collections can never be commingled with the general fund. They are legally distinct categories serving different purposes. The Special Education Fund is likewise a separate fund, with its own dedicated cashbook and deposit account. Commingling of funds is one of the most common and most serious findings in Commission on Audit reviews of local government units. It distorts the financial picture and exposes every responsible officer to disallowance and surcharge. Keep every fund completely separate, every time. Next slide. Part 3. Accountable forms. An accountable form is any government form that carries monetary value, or whose proper issuance and custody creates legal accountability on the officer holding it. The National Printing Office holds exclusive authority, under Executive Order No. 285, Series 1987, to print all such forms, specifically to prevent counterfeiting. The Commission on Audit, through Circular No. 95-009, prohibits any local government unit from using forms printed by anyone else. Over the next several slides we go through the complete master list. What each form is, when it's used, who may legally issue it, and what happens when something goes wrong. Next slide. Special attention. Accountable Form 51, the official receipt, the single most important form in this entire guide. It must be issued immediately, at the precise moment of payment, never at the end of the day. It must be in strict numerical sequence, with no gaps. Even an accidental skip creates a legal presumption of unreported collection. Every field must be fully completed. The pad number and the official receipt series must appear in the report of collections, for cross-verification against the report on accountability. When a receipt is cancelled, keep all copies intact. A missing cancelled receipt looks identical to a hidden, concealed collection. Only the specifically assigned, bonded officer may issue this form. A collection made without an accompanying official receipt is legally non-existent, and is presumed to have been misappropriated. No exception for small amounts, no permissible delay. Next slide. Continuing through the master list, Accountable Forms 52 through 55. Accountable Form 52, the Certificate of Record of Transfer of Large Cattle, documents the transfer of ownership of carabao, cows, or horses from one registered owner to another. The transfer is not legally valid without it. Accountable Form 53, the Certificate of Ownership of Large Cattle, serves as proof of registered ownership, required for transport, sale, or slaughter. Accountable Form 54 is the marriage license, with a fee collected by the municipal treasurer, valid 120 days from issuance. Accountable Form 55, the cash tickets, in denominations of 1, 2, 5, and 10 pesos, are used in markets, fairs, ports, and parks. All stubs of used tickets must be retained, and the volume sold monitored daily through a cash ticket monitoring report, attached to the report of collections. Next slide. Accountable Form 56, the real property tax receipt, acknowledges payment of the basic tax or the Special Education Fund component, containing the taxpayer's name, tax account number, property description, assessed value, basic tax amount, Special Education Fund amount, penalties, and discount. Accountable Form 57, the slaughter permit and fee receipt, serves a dual purpose. the official permit to slaughter livestock, and acknowledgement of payment of the slaughter fee per animal. Accountable Form 58, the burial permit and fee receipt, is likewise dual purpose. The official permit for interment, cremation, or exhumation, and acknowledgement of payment. Each of these three forms combines a regulatory permit with revenue collection, and must be handled with the same accountability as Accountable Form 51. Next slide. Special attention turns to the Community Tax Certificate, the cedula, an area where barangay treasurers frequently exceed their actual legal authority. Blank forms may only be requisitioned by the municipal treasurer, through the provincial treasurer. A barangay treasurer has no independent authority to requisition them directly. A barangay treasurer may be deputized to issue community tax certificates, but strictly limited to natural persons, individuals only. A barangay treasurer can never collect community tax from a corporation, partnership, or other juridical entity. That authority remains exclusively with the municipal treasurer. The barangay treasurer must deposit community tax collections with the municipal treasurer within 5 days. This 5-day rule applies only to the barangay treasurer's deposit. The municipal treasurer still deposits to the bank daily. Next slide. Special attention on the physical custody of accountable forms. Vault security is often the first thing an auditor examines. You need a genuinely fireproof safe. An ordinary steel cabinet does not satisfy this requirement. The combination is known only to the designated accountable officer, never shared with anyone, not even the mayor. The vault must be physically anchored so it cannot be carried away. The combination must be changed at every change of treasurer, before the outgoing officer leaves. The single most important custody rule: no new official receipt booklet shall be issued until the previous booklet stubs have been received, counted, and verified against submitted reports, and the report on accountability has been updated. A treasurer who issues a new booklet without this verification becomes jointly and solidly liable for any unaccounted collections in that booklet. Next slide. Special attention on what to do when an accountable form is genuinely lost. Report immediately to the treasurer, who must issue a formal written notice to prevent the lost form being used fraudulently. This notification is a required step before any request for relief from accountability can be considered. Commission on Audit Circular No. 84-233 requires immediate reporting and written reconciliation of any discrepancy or unexplained variance, however small. Any accountable form that does not appear in the authorized logbook, the report on accountability, or the consolidated report must be explained in writing immediately. Silence is never an acceptable response to a missing form. Next slide. Part 4. Special attention on the report of collections and deposits, one of the most frequently submitted, and frequently deficient, documents in the entire system. It must be prepared separately for each fund type. General Fund, Special Education Fund, and Trust Fund each need their own report, since commingling them violates Section 13 of the NGAS rules. The PAD number and the official receipt series are both mandatory entries for cross-verification against the report on accountability. Cancelled receipts must be listed separately with all copies attached. For check payments, 4 details are mandatory: bank name, check date, check number, and exact amount. Missing even one makes a dishonored check practically untraceable. Next slide. The report of collections and deposits is prepared in 4 copies. Copy 1, the original, goes to the Commission on Audit Resident Auditor, with the duplicate receipts and the bank-validated deposit slip. Copy 2 goes to the Treasurer or local accountant, as basis for the journal entry voucher. This must arrive daily, or by the next working day at the latest. Copy 3 goes to the liquidating officer. Copy 4 remains with the collecting officer as a personal file copy. The most common error: an absent PAD number means the report cannot be cross-verified, a deficiency finding against both the collector and the treasurer. Late submission means the journal entry voucher cannot be prepared on schedule, and the financial statements become understated. Next slide. Special attention on the role of the liquidating officer, because confusion here leads directly to broken chains of accountability. This officer receives collections from field collectors, verifies them against their submitted reports, consolidates everything into a separate report of collections, and remits the cash, intact, to the treasurer. The critical rule: the liquidating officer does not deposit to the bank. That function belongs exclusively to the treasurer. A liquidating officer who deposits funds directly, without the treasurer's express written authorization, creates a break in the chain of accountability. Remember the flow: the National Printing Office, or the Bureau of the Treasury, issues forms to the treasurer. The treasurer issues to the liquidating officer. The liquidating officer issues to the collector. Accountability flows downward, joint liability flows upward. Next slide. Special attention on the report on accountability for accountable forms, a report that trips up even experienced treasurers. It is prepared monthly. Beginning balance plus forms received minus forms used or issued minus forms cancelled equals the ending balance. But this report is fundamentally a record. It is not, by itself, equivalent to a physical count. The physical count of booklets must be performed separately, and must match the ending balance shown on the report. If the report says 10 booklets remaining, but you physically count only 8, you have 2 unaccounted booklets, and the full face value will be formally demanded, personally, from the accountable officer responsible. The paper record and the physical reality must always match. Confirm this every single month. Next slide. The consolidated report on accountability is prepared monthly by the treasurer, consolidating the individual reports of every collector in the local government unit. If a booklet issued by a liquidating officer to a collector is later lost, the collector who held it is primarily liable. The liquidating officer becomes secondarily liable only if monitoring of that collector had failed. The treasurer becomes jointly liable only if overall supervision across the system was lacking. When a loss occurs, report it immediately, in sequence. First, an affidavit of loss. Second, a police report if theft is suspected. Third, notification to the Commission on Audit within 24 hours. And fourth, a formal application for relief within 30 days. Missing any one step significantly weakens your legal position. Next slide. Part 5, the 8-step collection cycle. Step 1, authorization, requires 4 things together before any collection may begin: a valid local ordinance, a written appointment naming the collector, a current fidelity bond, and an officially issued receipt booklet. Step 2, the collector issues the official receipt immediately upon receiving payment. Step 3, records the transaction in the cash book the same day. Step 4, prepares the daily report of collections and deposits. Step 5, remits the cash to the liquidating officer or directly to the treasurer. Step 6, the liquidating officer, where involved, consolidates and remits intact. Step 7, the treasurer deposits to the authorized bank, daily, or by the next banking day. Step 8, the treasurer submits documentation to the accountant for the journal entry voucher. Next slide. Special attention on the cash book, the continuous record of every accountable officer's transactions. Every entry must be written in permanent ink. Pencil is absolutely prohibited, because it can be altered without trace. When a correction is needed, cross out the wrong entry with a single clean line, write the correct entry beside it, and initial the correction. Using correction fluid to cover an entry is not a shortcut. It is falsification, punishable under Article 171 of the Revised Penal Code. The cash book must be balanced and certified daily, with a separate cash book for each fund type. When an accountable officer leaves their position, the cash book must be formally submitted as part of the turnover. No clearance is issued without it. Next slide. Part 6, the most critical part of this guide. One of the single most important warnings: job order workers are not government employees. They are not covered by civil service law and not covered by the public bonding law. Treasury Circular No. 1-2026 explicitly excludes persons not formally employed in the civil service from being bondable accountable offices. A job order worker cannot be bonded and therefore cannot, as a matter of law, ever be a legitimate collecting officer. If a job order worker steals collected money, the criminal charge is theft, not malversation, because the legal element of public officer is absent. But the government still loses the money regardless, and the treasurer who knowingly allowed a job order worker to handle collections bears full personal liability. This is a documented, recurring finding in local government audits nationwide. Next slide. Special attention on one of the most dangerous and easily concealable forms of fraud: lapping. Article 217 of the Revised Penal Code defines malversation as misappropriation of public funds by an accountable officer, and lapping is one of the most common mechanisms. Day 1, 10,000 pesos collected from taxpayer A. An official receipt is issued, but the officer keeps the cash. No deposit is made. Day 3, another 10,000 pesos collected, used to cover the Day 1 shortfall. Day 1 now appears properly deposited, but Day 3's money has disappeared. Day 5, yet another collection covers the Day 3 gap. The shortage rotates forward indefinitely until a surprise, unannounced cash count exposes a deficit spanning multiple receipts and dates. This is malversation, and subsequent repayment, even full repayment, does not erase the criminal liability, because the crime is complete at the moment of misappropriation, not at discovery. Next slide. 5 critical warnings together. Warning 1. Avail, an IOU, given in exchange for collected cash, is treated as a cash shortage equal to its full value. The IOU has no legal defense value. Warning 2. Collections may never be used to encash any check, private or government, an absolute prohibition. Warning 3. Only current dated checks are accepted, and any check with erasures or alterations must be refused outright. Warning 4. Erasures of any kind in official records, by correction fluid, scraping, or overwriting, constitute falsification under Article 171 of the Revised Penal Code. Warning 5. The absence of a collector's cash book means there is no independent running record, and the accountant's general ledger is not a legal substitute for it. Next slide. Special attention on what I consider the single best internal control in this entire guide. The treasurer must confirm, every single day, that the total of official receipts issued equals the total cash remitted, which equals the total amount deposited to the bank. 3 numbers, checked daily, that must always agree. Any discrepancy at any point requires immediate investigation. If collections exceed the amount deposited, that is a cash shortage and must be explained right away. If the gap does not close, but grows progressively larger over multiple days, that is the CLASSIC textbook indicator that lapping fraud is in progress, demanding an immediate, completely unannounced cash count. Next slide. Part 7. Electronic Collections. Commission on Audit Circular No. 2021-014 defines electronic collection as a mode where no physical money passes through the collecting officer's hands. There are 2 recognized schemes. Under collect, aggregate, and remit, an intermediary, such as a bank or digital wallet provider, collects on the government's behalf, and must remit the full amount, intact, within the next banking day, no exceptions. Under self-collect credit, the government collects directly, and must issue an electronic official receipt immediately for every transaction. Critical warning. Collecting through GCash, Maya, or any digital platform without a written contract, a management representation letter, and a designated focal person violates this circular directly, exposing every transaction to potential disallowance. Next slide. Part 8. The Treasurer's Supervisory Duty. Section 104 of Presidential Decree 1445 requires the agency head, and the Treasurer by extension, to exercise the diligence of a good father of a family when supervising every accountable officer. Failing to exercise that diligence makes the treasurer jointly and solidly liable with the officer primarily accountable. The Commission on Audit may demand the full amount of any loss from either the collector, or the treasurer, or both. A treasurer cannot simply point at the collector's misconduct and walk away unscathed. Proper supervision means monthly verification of every report on accountability, daily confirmation that collections equal deposits, and unannounced surprise cash counts at least once a month. Next slide. Part 9. An overview of the 30 most common audit findings nationwide. They fall into broad categories: delayed or missing deposits, deficiencies in the report of collections and deposits, such as missing pad numbers, the report on accountability, particularly physical counts that fail to match written records, unauthorized personnel handling collections, the job order problem, falsification through erasure or backdated documents, electronic collections implemented without proper compliance prerequisites, and fidelity bonding deficiencies, particularly underbonding. These 30 findings, collectively, represent the overwhelming majority of audit observations issued against treasurers and collectors nationwide. Next slide. Part 10. 25 misconceptions heard constantly in the field. Misconception: a verbal instruction from the mayor is sufficient legal cover. Correct answer: only a written protest filed before the Act provides legal protection. Misconception: small shortages aren't worth reporting because they'll balance out. Correct answer: there is no minimum threshold. Every peso must be accounted for. Misconception: a collector who has worked faithfully for years doesn't need surprise cash counts. Correct answer: surprise counts exist precisely because they don't depend on trust. Misconception: job order workers can be temporarily authorized to handle cash if documented in writing. Correct answer: no documentation cures the legal defects that a job order worker cannot be bonded. Next slide. Continuing the misconceptions. Misconception: electronic collections through GCash or Maya are automatically compliant because other local government units use them. Correct answer: each unit must independently satisfy the written contract, management representation letter, and focal person requirements. Misconception: a fidelity bond, once obtained, remains adequate indefinitely. Correct answer: it must be periodically reassessed against the highest single-day collection from the preceding fiscal year. Misconception: cancelled receipts can be discarded once noted in a personal logbook. Correct answer: all copies must be physically retained and attached to the report of collections. The underlying theme, good intentions and informal local custom, never satisfy specific written legal requirements. Next slide. Part 11. Internal control. 5 essential controls that prevent the overwhelming majority of fraud discussed in this guide. 1. Segregation of duties. No single individual should collect, record, and deposit. 2. The unannounced surprise cash count. 3. Proper custody of accountable forms, the fireproof vault and the no new booklet rule. 4. Daily reconciliation between collections, remittances, and deposits, the single best control in this guide. 5. A documented written turnover process whenever an accountable officer leaves, so the incoming officer assumes only an independently verified balance. Next slide. Part 12. Fidelity bonding, one of the most practically important parts of this guide, because bonding issues silently expose accountable officers to genuine financial ruin. Treasury Circular No. 1-2026 requires the bond amount for any collecting officer to be based on the highest single-day collection figure recorded during the immediately preceding fiscal year, not an outdated or convenient estimate. This ensures the bond tracks real, current financial risk, rather than remaining frozen at a historical figure that no longer reflects present-day collection volumes. Next slide. The underbonding problem, in depth. A collector bonded for only 10,000 pesos years ago, when collection volumes were lower and never reassessed. But actual daily collections, on a busy market day or during real property tax season, now reach 15, 20, even 25,000 pesos. Every peso above the original bond is completely uninsured, falling directly and jointly on the collecting officer and the supervising treasurer. Maximum bond coverage is 11 million pesos per station. There is enormous room to insure properly. The premium rate is just 1.5% of the bond amount per year, minimum 150 pesos. A 20,000 peso bond costs only 300 pesos per year. There is simply no financial excuse for an outdated, insufficient bond. Next slide. Special attention extends to disbursing officers and officers holding cash advances. Bonding rules differ here. A disbursing officer's bond is based on the highest single-day disbursement figure from the preceding fiscal year, the same underlying logic as collecting officers. An officer holding a standing cash advance must be bonded for an amount reflecting the maximum cash advance balance authorized. In smaller local government units, it's common for one individual to serve as both collecting officer and disbursing officer. That bond must cover both roles simultaneously, not collection alone, or there is a real and dangerous gap in coverage. Next slide. Special attention on the genuine reality facing many smaller local government units. Limited permanent staff, but multiple collection points, a market, a water system, a port, all at once. The temptation is to assign job order workers to handle cash collection. This is never legally permissible, because job order workers cannot be bonded and cannot lawfully be accountable officers. Legal alternatives exist. Consolidate collection points so a single bonded officer covers multiple nearby locations in one working day. Rotate a small number of bonded permanent staff across collection points on a defined schedule. Or formally request additional staffing positions, justified by documented collection volume. Next slide. Part 13, the complete table of legal references, is on your screen, for use as a quick lookup guide. 3 things every accountable officer must always remember. 1. Issue an official receipt for every collection, immediately, with no exceptions and no delays. 2. Deposit collections intact and daily, with no deductions, no shortcuts. 3. Account for every single peso, down to the centavo, every time. Your protection, in the end, is never a lawyer and never an explanation offered after the fact. Your protection is a complete, properly reconciled, daily maintained set of records, where the official receipt, the cash book, the report of collections, the report on accountability, and the validated deposit slip all agree with one another, every single day. Next slide. Now, let us move to an Excel sheet that can be downloaded in the comment section. This Excel file is an audit and accountability tool. It is a macro-enabled workbook, built to examine government collections against the accountable forms used to generate them, to detect irregularities in official receipt sequences, and to maintain a running accountability ledger alongside a cashbook module for each accountable officer. This file can be used by an auditor or by an accountable officer, such as a treasurer or a collector. Macros must be enabled for the workbook to function. Next slide. The workbook contains 13 working sheets, used in a specific sequence, because each downstream sheet depends on the data encoded before it. Step 1. Source. The primary data entry of all collections. Step 2. Result. Automatic grouping per RCD number, RCD date, collector, and accountable form. Step 3. Result RCD. Grouping per RCD number, collector, and accountable form, with date removed. Step 4. By 50. grouping accountable forms into blocks of 50 pieces. Step 5, AF 55, manual entry of cash ticket collections. Step 6, logbook, manual encoding of the complete inventory of accountable forms. Step 7, CRAAF, automatic computation of accountable forms balances. Step 8, unlocated, an automatic flag of forms used but missing from the logbook. Step 9, cash book, R per officer, per fund cash ledger. And Step 10, dissect by 50, a utility to break bulk purchases into blocks of 50. Next slide. Step 1, the source sheet, the single most important sheet in the entire workbook. Every other sheet is built using formulas that pull data directly from source. All collections, except accountable forms with their own pre-printed value, such as cash tickets, shall be encoded here, from the abstract of collections maintained by the Treasury or Accounting Office. There shall be no vacant OR blank cell anywhere in a row. Every column, A through K, must be completely filled in for every row, or the grouping formulas downstream will miscount. Next slide. The source sheet has 11 columns. Column A, RCD date, a true calendar date. Column B, RCD number. Column C, name of the accountable officer. Columns A and C must always be consistent, because the entire grouping logic depends on an exact match across rows. Column D, collection date. Column E, accountable form. Column F, quantity, computed as column H, 2, less column G, from, +1. Columns G and H, the from and to serial numbers, must be entered as numbers, never as text, or the SUMIFS formulas used throughout this workbook will fail silently. Column I, collection amount. Column J, remittance amount. And column K, the fund, general fund, special education fund, or trust fund. Next slide. Special attention, a critical caution. Accountable Form 56, the real property tax receipt, is unique. A single receipt, one OR number, evidences collection for two funds at once, the general fund and the special education fund. The same OR number legitimately appears twice in the underlying records. If you encode both the general fund line and the special education fund line into source, the workbook's duplicate detection logic will flag this as a duplicate OR number, even though nothing is wrong. To prevent this false alarm, exclude the special education fund posting of Accountable Form 56 from source entirely. Encode it only once, under General Fund, using the combined amount. Next slide. Step 2, the result sheet. Once source is complete, click its arrow button. The workbook groups every collection by RCD number, RCD date, collector, and accountable form. Two control cells sit at the top. Cell O1, the quantity of accountable forms, and cell R1, the amount collected. Both must equal 0. If either does not, something is wrong in your source sheet, and you must investigate before proceeding. Common causes: a duplicate OR number, a wrong sequence typed, an OR number typed as text instead of number, or vacant information in the source sheet. Next slide. Step 3, the result RCD sheet. After result balances, click its arrow. This sheet groups by RCD number, collector, and accountable form, with the date removed, useful when a single RCD spans multiple dates. Its control cells are cell L1, quantity, and cell O1, amount. Both must equal 0. Result and result RCD together are the two most important outputs of this workbook for preparing a cash examination working paper. Next slide. Step 4, the by 50 sheet. Click its arrow to regroup accountable forms into blocks of 50 pieces, mirroring how forms are physically printed and bound. Its control cells are cell J1, quantity, and cell M1, amount. Both must equal 0. Whenever any control cell across result RCD, or by 50 is not 0, investigate in this order: blank or vacant information, duplicate accountable form numbers, OR numbers typed as text instead of number, and irregularities in the number series itself, such as a range already captured in a previous row. Next slide. Step 6. The logbook sheet, the master, manually maintained inventory of every accountable form in the custody of the local government unit. Unlike source, result, and by 50, the logbook must be encoded manually. It includes the previous beginning balance, all current purchases from other government agencies, and the complete identifying information for each batch. Form type, quantity, from and to numbers, the name of the officer issued to, the issued date, and the purchase date. Next slide. Special attention, a critical rule. Every accountable form recorded in the logbook must be broken down into blocks that always end at a multiple of 50. For example, a beginning balance starting at serial number 41-175 must be broken into 41-1 to 41-50, then 41-51 to 41-100, then 41-101 to 41-150, and finally 41-151 to 41-175 as the partial remaining block. Only the final, partially used block may end at a number that is not a multiple of 50. Failing to follow this convention makes reconciliation against the by 50 sheet and the RAAF sheet very difficult. Next slide. Special attention on issuance to barangay treasurers. The rule differs by form. For accountable form 51, the official receipt, once sold or issued to the barangay treasurer, it is considered issued, recorded as an outgoing entry against the barangay treasurer's name. For the community tax certificate, it is not treated as issued to the barangay treasurer in the same sense, because the barangay treasurer is merely deputized to collect community tax. Legal accountability for community tax certificate forms remains with the municipal or city treasurer at all times, even while physically in the barangay treasurer's custody. Next slide. Step 7. The RAAF sheet, the Consolidated Report on Accountability for Accountable Forms, one of the most important sheets in the entire workbook. Once logbook is complete, click its arrow. The underlying logic is simple. Ending balance equals logbook, the total on hand, less issuance, the total used. At the bottom of the sheet is a total row showing the computed ending balance. This must never be accepted at face value. You, as the auditor, must independently and manually recompute this figure, and compare it against the existing total. If your recomputed figure does not tally, something is wrong, and it must be investigated before the RAAF can be relied upon. Next slide. To pinpoint exactly which accountable form, and which collector, is causing an imbalance, create a checking formula in column O, the first empty column after the balance section. Insert a formula comparing logbook quantity minus issuance quantity against the balance quantity already shown, flagging each row as OK or check. Copy this down every row, apply autofilter to column O, and filter for the check rows only. Each remaining row identifies the exact form series and the exact collector where the imbalance originates. Then return to source and logbook to investigate that specific series and collector. Next slide. Step 8. The unlocated sheet, an automatic exception report. Any accountable form that appears as used in source, but cannot be matched against any entry in logbook, will appear here. If any forms appear on unlocated, this is a serious finding. Forms were used to make collections that are not included in the official list of all accountable forms ever recorded as available to the local government unit. This requires immediate, specific investigation. Next slide. The AF55 sheet is for cash tickets, filled up manually. Columns are through e-cover RCD date, RCD number, name, collection date, and pad number. Column F is the face value, the pre-printed peso value per ticket. Column G is quantity sold. Columns H and I, collection and remittance, calculate automatically as face value multiplied by quantity. Column J is the fund. Next slide. The cash book sheet maintains a running cash ledger for each accountable officer by fund. Click its arrow, select the name of the accountable officer, select the fund, click the arrow again to load the data, and input the beginning balance if one exists. The Dissect by 50 sheet is a utility for bulk purchases. Fill columns A through E with the bulk purchase information, click the arrow in column L to automatically dissect the purchase into individual 50-piece blocks, and then transfer those blocks into the logbook sheet, one block at a time, following the same blocks of 50 convention. Next slide. The golden rule of this workbook: every control cell, O1 and R1 in result, L1 and O1 in result RCD, J1 and M1 in by 50, and the recomputed ending balance in RAAF, exists to tell you, automatically, whether your source sheet and logbook sheet are complete, accurate, and free of duplication. Never finalize a cash examination working paper while any control cell remains unequal to 0, or while any row remains on the unlocated sheet. This file, again, can be used by an auditor conducting an examination, or by an accountable officer maintaining their own records. The download link is in the comment section. Next slide. 3 things to always remember. 1. Issue an official receipt for every collection, immediately. 2. Deposit collections intact and daily. 3. Account for every single peso, to the centavo. Your protection is your records, not a lawyer. And for the audit workbook, every control cell must read 0 before you trust the result. This concludes the guide.